Hi traders, welcome to this video. Today I'm going to be taking you through the WCS method, but in action. Okay, so if you are unfamiliar with the WCS method, this is a method that I have coined myself. It basically stands for why you should be in a market, the conditions around the market, and a strategy to help you take consistent moves within the market. Okay, so why am I interested in this particular market? So this particular market that we're looking at right now is the Swiss franc versus the Japanese yen. And you may think this isn't a market I am interested in. I never trade this. I only trade euro dollar, or I only trade pound yen, or things like that. And that's great, you know, and if that's working for you, stick with that. But if it's not, and you want to open your mind up to something else, then stick around to watch the rest of this video. So why do I want to be short in Swiss yen? And most importantly, why have I been short in Swiss yen personally? Okay, so you can see that I was short here, I was short here, I was short here, and I'm currently short again Swiss yen. Okay, and the reason behind this is all to do with some fundamental indicators. Okay, so I'm just going to drag down from the top screen here, and I'm just going to show you some stats. Okay, and this is how I like to look for opportunities from a why. It's not my only way of doing this. I do have other methods as well. You're all probably familiar with the currency strength meter, and you're all probably very familiar with commitment of trader reports right now, if you're familiar with the channel anyway, and if you're familiar with live streams. But other ways to do it is by looking at something called interest rate differentials, and that is the difference between two countries' interest rates, right? And most importantly, what central banks are doing. So what I've got on the screen here, this grey line here is the Japanese interest rate, and the blue line here is Switzerland's interest rate. Okay, and what do you notice about the two? Well, at the start of 2024, really what we have seen is the Bank of Japan hiking interest rates. What have we seen from the Swiss National Bank? They have been decreasing interest rates, right? Now that does take a while for it to kind of flow into the market. If we go back over to the Swiss yen chart, just on here, and just go up to the weekly chart, right? If we look at 2024's performance, it was pretty range bound, okay? But what I do notice is that there were big sell-off points in the market. There was a huge sell-off here, big sell-off here, and then most importantly in the last sort of few months, or the last couple of months, we've seen a big sell-off as well. But what I'm looking for is potential further downside to this bet because of what's happening in the difference between interest rates between those countries. Okay, so just going back to what's happening here, the Swiss National Bank are cutting interest rates, and they are forecast to cut interest rates even further, potentially bringing interest rates to negative territory again. Why? Inflation. Inflation is basically showing us that demand in the market in Switzerland has lowered significantly because the costs of goods and services are actually moving lower. Okay, and that is not what a central bank wants to see. On the other side, in Japan, we're seeing them hiking interest rates. Why? Because inflation is climbing because of recent wage growth in Japan. So they're forecast to actually hike further this year. If we go over to the GDP growth rate as well, we can see that Japan, the grey line, has been tracking to the upside. GDP has been climbing. We can also see that in Switzerland it's been climbing as well, but it's not climbing at a rate that is relative to what's happening in Japan. When we go take a look at the unemployment rate though, this is where it really starts to differ. Switzerland is the grey line this time. Their unemployment rate is up at 3%. It has been climbing rapidly since July of last year, which is again, why are they trying to cut interest rates? They're trying to stimulate the economy. Why? Unemployment is rising. That is also leading to the lack of demand. If we look at Japan, it's actually decreasing in Japan. So again, some good demand in Japan. So that's why I'm very, very interested in being a Swiss yen seller. Okay, now that is the Y side of the WCS method, okay, why do I want to be in this market? Is because the Bank of Japan, the BOJ, hiking interest rates, okay, the Swiss National Bank decreasing interest rates. I want to be Swiss yen short. Why? Because if a country is increasing rates, then usually you see capital inflows into that currency. If they are decreasing or cutting rates, there's usually a move away from that currency, okay, and into a currency that has a stronger interest rate, okay. So essentially that's what we're seeing here, right? Now, we've got the Y. That's fantastic. We need the conditions to line up, because sometimes the market takes a while to pick up on this, because they're always using sort of data that you have to kind of use the past on, and then you use forward data as well, kind of like inflation data, to try and predict what the central bank is going to be doing next. Then once they have that prediction and confidence, that's when you start to see hedge funds piling into moves, right? So the conditions, are they there to be short in this market? Yes, right. If we go to a higher time frame and just have a little look at this daily chart here, we can see that the market has been making lower lows and lower highs, okay, very distinctly in that condition, okay. We've come down into this key demand zone now, so we could possibly start to see reversals out of here. You might notice that why they're taking a short then, but I'll explain that in a moment. But all in all, this market is in a downward trend. It's been pretty much in this downward trend since we broke this low back in December of last year, okay. Now, if we go take a look at the bigger picture, the market has been sideways, but we've had some big sell-offs. This was the Japanese yen intervention, okay. This was that kind of comeback of that intervention, right, that kind of pause back up. This is where we've started to see real big kind of swings in the market, and I've been focused on shorting Swiss yen since the end of last year, because I believe that we could see a significant downside to this market, even with potential down towards 161. So I want to be trying to short those moves to the downside, and the conditions are there to do it. It's great having the conditions. What's the strategy? Now, one of my strategies, especially when I'm swing trading, is trying to look for where the primary phase ends and the secondary phase ends and a primary phase begins. What does that mean? Well, in a downward trend on the daily chart, we have, I think anyway, this is my kind of theory of markets, is a primary phase and a secondary phase. The primary phase is usually the longest leg of the move, and the secondary phase is the short phase, or you might call it a retracement if you're familiar with like Fibonacci and stuff. Now, within that, there are trends within it. So that was a daily chart. The black line is the daily chart. On the 4-hour chart, you'll get a trend within that that makes higher highs and higher lows. There'll be shorter primary and secondary phases within that. And then you'll get the kind of upward trend on a secondary phase and then the break of that. That's what I'm trying to do. I'm trying to find out where my lower time frame breaks trend, which could potentially, doesn't always, but could potentially lead us going from a primary phase to from a secondary phase to that primary phase, okay. And that's exactly what I've done with these few moves here. Daily chart, right, let's map it out together. Daily chart, primary phase, okay, secondary phase. Let's actually make these two different colors. Secondary phase, okay, we'll go with the blue as the primary phase, okay, secondary phase, go back to the blue, primary phase, okay, purple, secondary phase, and so on and so forth. You get the idea at that point. I'm looking for those changes. You can see where I've taken trades is where that primary phase, or that secondary phase, sorry, is ending and the primary phase takes over. Secondary phase ending, primary takes over. Secondary phase ending, primary takes over. That's how I've been trading this market. Now, if we go to the 4-hour chart, you can see this as well. What happens? Well, market's making higher highs and higher lows. That breaks. That's where I get short, okay? Market has been making higher highs and higher lows, okay? That is the low area in here, okay, and then that was the low, and then this was the low. I ended up taking a short in here as well, okay. Let's go back a little bit further. If I just take off these controls here and we go back oh sorry, I've jumped ahead. There was the other one, sorry. This is the other one here, okay? Market is pulling back. I actually took this on an hourly time frame. So let's actually just go back to the hourly chart at that point. And then I can show you here, right? Because market had actually made a new low. I actually missed that sort of breakout there, but I noticed that price was consolidating and it was at those highs, so I ended up taking a position on an hourly chart move in here. Okay, so I'm looking for those areas where the primary phase and the secondary, or the primary phase starts by the secondary phase ending. Now I've took a short here. This is quite an aggressive short. I've gone in at very low risk, okay? So I've only gone in at 0.5% risk here because I'm trading lower time frames. I'm looking at the H4 time frame and it's making lower lows and lower highs, right? And I'm looking for that transition to change. Are we going to get another primary phase which takes us down into these supporting lows in here? When I look at the hourly chart, what have I had? I've had that breaking trend, right? The market is pushing higher, breaks. I am on that short now. I'm looking to see if we can go and target those lows. So hopefully that makes a ton of sense to you. This is my WCS method. I wanted to show it you in action, like actually going through it. This is my Swiss yen chart. I've had 3 trades on this already. I'm in a 4th position now, looking to see if I can go target those lows. It is a Friday. I might cut this pretty early because it's a Friday. I don't particularly want to hold trades over the weekend because of the situation on geopolitical scale recently. But yeah, essentially looking to see if we can just extend into these lows by the end of the day, and I'll look to see if I can take profit at that point. But thank you for watching this video. This is in no way, shape or form trading advice, by the way. This isn't telling you to go and short Swiss yen. This is just all my own ideas and theories around the market. Like I said before, if you are familiar with the channel, I talk about the WCS method before, but please go and do your own research before you do any trades within the market. Trading on margin is high risk, so always please remember that. Thank you for watching though. If you have stuck around, I really appreciate you. Leave this video a thumbs up and subscribe if you are new. Speak to you soon.